So midterm, we'll go over every chapter and kind of high level what everyone needs to know. And then I'll answer questions along the way. And then if there's time at the end, I'll have my office hours for any individual questions. Chapter 9, terminology of liabilities. So we just went over this, but make sure we memorize as a class. It's your responsibility to know each one of these pieces. Current versus long-term liabilities, unearned revenue, notes payable and accrued interest, maturity value, payroll term, employer and employee payroll taxes. So current versus long-term, that's the operating cycle or a year, whichever is greater. We're generally going to assume a year for this class. Unearned revenue is deferred revenue, right? Revenue that we, cash that we've collected on revenue that we haven't performed yet, we have a contractual right to. Notes payable and accrued interest, we walked through that. That was the example where we might have accounts payable that's converted to notes. That was in the last lecture. And then interest, accrued interest either being paid because the interest is paid after a period end or a year end, or accrued interest for monthly accrual. And then notes payable, as well as the accounts payable that are converted to notes payable. Maturity value, that's the amount we owe at the end of a deal, end of a notes payable, and the payroll terms and the difference between employer and employee taxes. Everything we covered last. So knowing the difference between FICA and FUTA, and knowing which is employer and which is employee, and how to do the journal entries for the accruals. For each of these, we need to know everything that we knew in the first few chapters, right? How it's represented on a financial statement, how they're calculated, the classification, the dollar value, the journal entries, and the normal balances. So make sure you know your calculation journal entries for notes payable and accrued interest, withholdings, deductions, and payroll expenses, calculated vacation liability, and determining warranty expense and warranty liabilities. Pretty much everything we just covered, but making sure that you focus on these topics, as well as any ratios that are on your book are always fair game for testing. Any questions related to any of these topics? And we just covered it, so it might be more important for next time. Payroll liabilities, recording payroll deductions, withholdings, calculating gross versus net pay, identifying and recording employer payroll taxes, and FICA, Medicare, and Social Security, FUTA, and SUTA. Everything we just discussed. So since we just discussed this, I'm not going to spend too much time unless someone has questions in the chat. We'll go to the next chapter or next some questions. Board reward. What is the employee's net pay in this situation? So we have the answers here. We'll go through how to calculate it. Employee, what's its net pay? What's the total amount earnings? And what is the total amount of the employer's payroll taxes payable for the month of January? So just another example for you, and make sure you do your homework as well. Example. Employee earned a total of $7,500. We have the FICA Medicare taxes. They owe half of it, and the employer owns half, right? Owes half. So 6.2 and 1.425 is 7.65. I'll open a calculator here. 0.0765 times 7,500. We owe $573.75 for that. The employee owes it. Unemployment taxes for FUTA is 0.6 and 5.4 on the first 7,000 of earnings. We own 7,500. But FUTA and SUTA, it's not related to the employee portion. That's for the employer portion. Federal tax withholding is 1,000. State tax withholding is 500. So what's the net pay? We'll take the 7,500 minus the 573.75 we just calculated, minus the 1,000 of federal tax withholding, minus the 500 state tax withholding to get what our employee's net pay is. And what are the taxes withheld from the employee? It's the 573.75 plus 1,000 plus 500. So it's just the difference of the 7,500 minus the 5,426.25. We get the withholdings. And finally, what is the total amount of the employer's payroll tax payable for the month of January? So now we need to know the employer portion. Employer also owes this, right? It's employee and employer tax. Then we also owe it for the FUTA and SUTA. So we take the 0.6 plus, 0.0606 plus 0.054 equals the So that's the total taxes here. 0.06 and 0.054. We multiply that by the 7,000 because that's the cap, 7,000 of earnings, that's 420. We add that to our FICA and we owe 993.75 on top of our employee withholdings. So that's chapter 9, making sure you know all of that, and hopefully you're equipped now to go through the homework. Chapter 8, accounting for long-term assets. This was, again, asset depreciable cost, accumulated depreciation, book value, depreciation expense, the methods of depreciation, and salvage value. Can anyone tell me some of the depreciation methods in the chat? A straight line's most common one. What are some other ones? You have double declining method. Yep, unit of production method. Good job, Huling. Perfect. Exactly. So accumulate depreciation methods. You're gonna have to know how to calculate all of those different methods. They'll be expected on either in a multiple choice. We'll ask you tell you which year, and you'll have to figure out the answer, or you have to fill it in and fill the blanks depending on how the exam is. Asset depreciable cost. That's the total asset value minus the salvage value. Accumulated depreciation is how we're accumulating it over the years or over the periods. Book value is the asset value minus the accumulated depreciation, and then we talked about depreciation expense and salvage value, which is the same as residual value. Key calculations. Make sure that you know the difference of all the calculations for straight line, double declining, and unit of productions, and how to calculate the record and the depreciation expense, how to do partial year depreciation expense, how to calculate book value or net book value, and how to calculate gain or loss on sale of disposal, all of which we went over, and you have a recording of that lecture. So let's go over an example, and then I'll open up for questions. So 12/31 year end, we purchased something for $25,000 with a $5,000 salvage value and a 5-year useful life. Placed in service on 7/1. The machine is depreciated using double declining method. It's sold on 12/31/17 for $10,000. What's the company's gain or loss? And I could change any of these. I could say straight line method. I could say unit of account method, or and you'd have to be able to answer these questions, right? And so just to go through it as just a quick refresher, right? Step 1, we take the 1/5. It's 5-year useful life. We take 1/5 of it and multiply that by 2. That 1/5 is a straight line rate, and we multiply it by 2, get 40% for the double declining rate. And we multiply that by the beginning period book value, 25,000, which is 10,000. And as we put in service in half the year, the first half of the year, we had recognized depreciation expense of $5,000. Remember that if this was straight line, the book value at the beginning would, the depreciable value would be 20,000, not 25,000. For the double declining, we take out salvage value. For straight line, we don't take out, double declining, we don't use salvage value. We always just use the purchase price. For straight line, we will take 25,000 minus 5,000 to get the depreciable value. 5,000, so we have the $5,000 in expense here for the first year. Beginning of the period value then is 25,000 minus the 5,000. So we have a beginning 2018 value of 20,000. I'm sorry, 2017 value of 20,000. And then 2017 for the year, we have 20,000 times